Hey everyone, I want to help you prep to ace your next SAP accounting job interview. I'll explain the 30 most popular SAP FICO questions step by step so you can wow managers with your smarts. Whether you just graduated college or have used SAP for years, this question tests some money stuff recruiters want you to know, like how to record transactions, manage assets, expenses, run reports, catch errors, accounting basics. I'll break down tough concepts using simple real world examples so they stick. So get ready for talking about debit versus credit, financial reporting, period closing, and more FICO goodies. This video is perfect last minute cramming before an SAP accounting interview. So don't forget to subscribe and click the bell icon so you never miss a career update. Let's see the first question. Compare SAP FICO with general financial accounting and controlling approach. I will compare SAP FICO to more general financial accounting and controlling method. So SAP FICO stands out in three main ways. Firstly, flexibility. SAP FICO allows for easy customization to meet a company's unique need. You can add specialized field, build custom reports, and configure work to match real-world processes. Most other accounting packages are more rigid and generic. Second, integration. SAP FICO seamlessly combines finance and controlling functions into a single unified system. There are no need for complex interfaces between separate modules. But with others, accounting softwares bringing together finance, controlling data can be an ongoing challenge. And third, multi-currency. SAP FICO makes it simple to transact and report in multiple currencies across the enterprise. Other systems typically don't provide robust multi-currency support without added complexity. So, in summary, SAP FICO brings more flexibility, tighter integration, and multi currency capabilities compared to alternate accounting and controlling approaches. This unique combination of strength is why many complex global organizations rely on SAP FICO to manage their financial data. The next question is, while handling the SAP FICO for the first time, why is it necessary for users to pay attention to the exchange rate? The default exchange rate settings FICO uses is just an average rate. It converts currencies in one fit size all way. The catch is the different companies have different business needs when handling multiple currencies. This default average rate won't work for every unique situation. For some companies, they actually need to follow official daily exchange rates for accounting and compliance purposes. Relying on FICO basic average would get them in trouble. And other organization wants up to the minute currency rates that match the live forex markets, and this helps them respond swiftly to fluctuations and avoid financial losses. So essentially, when first adopting SAP FICO, taking the time to check and adjust default exchange rate configuration is hugely important for any aspiring pro. You want to customize FICO to align with the specific finance processes, standard, and objectives within your company. This ensures accuracy from day one and prevents currency conversion problems before they start. The key lesson, don't just accept the SAP default settings, tailor them to fit the unique need for your businesses, and you will be off to a great start. Why the financial statements are important for any businesses. Financial statements are critical for companies of all sizes to work both track finances and make strategic decisions. There are five major property to maintain a financial statements are vital. First, they allow you to monitor the purpose of all incoming and outgoing funds with detailed transaction information. You gain clarity where money is originating and going. Second, financial statements create a historical digital recovery of every business payment or collection made over time. This financial data archives become invaluable for future reference. Third, reliable financial statement facilitates planning and forecasting to inform management choices. Leaders can model different scenarios to predict performance outcomes. Fourth, accurate records also streamline the preparation of tax documentation, which can potentially lower tax obligation and auditing risk for companies. And fifth, financial statements enables easy access to comprehensive historical financial data at any moment. It's needed to analyze performance or identify new opportunities. In summary, properly maintained financial records promote transparency, planning, compliance, and decision making. That's why consistent, detailed financial reporting is a must for business seeking and success and growth. Let's see the next question. Can you name few modules in with which it is possible for the users to integrate financial accounting? SAP's financial accounting module can integrate with several other business critical modules to share master data, transactional information. This integration eliminates duplicate data entry and provides a unified view of finances across domains. Some major SAP modules that interface with financial accounting include material management for purchase order and inventory evaluation, sales and distribution for customer invoices and revenue recognition, production planning for manufacturing costs and working process reporting, human resource management for employee expense recording and payroll posting, and financial transaction management for cash management, payments, and bank account reconciliation. This built in integration enables seamless information sharing between financial and other operational units. Whether it's a cost data from manufacturing, revenue data from sales, and payroll data from expense management, it's automatically synchronized with general ledger. Now let's understand why year dependent fiscal year in SAP. SAP provides options called year dependent fiscal year variant to accommodate businesses that don't follow a traditional calendar fiscal year. This allows customization of periods and dates. There are a couple of scenarios where year dependent fiscal year is helpful. First, some companies have fluctuating monthly duration based on project timelines and deadlines. They may need to conclude a month after 28th, 29th, 30th, and 31st day rather than fixed 30-day per month. SAP allows configuring a custom number of days per period. Second, organizations occasionally need to close their book early or late in the month based on the reporting requirements tied to the project cycle and milestones. The year dependent fiscal year functionality permits shifting period closing dates on a dynamic basis. For example, a business could designate May 2025 to have just 29 days to align with the resource planning for a large customer initiative rather than the full 31 days. And they could make up those 2 days by having July 2025 be 32 days instead of 30. This flexibility to customize month duration and adapt closing period timelines helps organizations match their fiscal calendars to underline the rhythm of their projects, rather than trying to force fit activities into static reporting periods. In summary, SAP year dependent fiscal year variant gives companies the agility to tailor fiscal periods to evolving project needs. Now let's move on to the next question. What exactly do you know about the SAP FICO? SAP FICO is short for Financial Accounting and Controlling. As the name implies, it's SAP's core module for managing the financial data and health of an organization. FICO serves as a vital function. It's used as a general ledger, accounting payable and receivable, asset accounting, cash and bank management, and tax computation. It also enables inventory valuation, cost center analysis, and preparation for balance sheets, profit and loss statements, and other key financial reports that provide insights into company performance. A major benefit of SAP FICO is data reliability and security. It has a robust control and automation to ensure integrity and accuracy for recording financial transactions. Users can trust in the efficient handling of high volumes of financial data without errors that could lead the incorrect reporting or financial risk. And beyond recording past transaction, FICO provides planning and forecasting tools to model future expected performance. In summary, SAP FICO forms the financial record keeping foundation of the organization. It delivers trusted, precise information to guide critical businesses' decision for company running. SAP FICO is likely to be the most essential module they rely on. What are the common reasons for errors in accounting that impacts do they actually have on the organization? Mistakes happen all the time in accounting. An employee might enter a wrong number, or maybe an invoice gets lost and never recorded. Even small errors can mess up financial reports and cause big headaches. If the book shows higher profits than the real life because expenses got missed, companies might spend money they don't actually have. If earning looks worse than they are because some sales didn't get counted, companies might cancel projects that they would have done fine. So, making tax forms and financial statements wrong due to errors can lead to refund problems or people losing trust in the business. The key is catching mistakes early before the spiral. Companies need to do a good check and balances so no one goes with the wrong number and doesn't throw off everything. An attentive accounting team that double checks work can save a business big time. So, staying on the top of the error prevents a bad planning decision down the road that costs money and credibility. Now, let's understand company code. What is the company code and when it is used? What is the limit on the currencies which can configure? The company code is the key component of the organizational structure in SAP's financial system. Think of it as a unique code assigned to represent a legally independent business unit, division, or subsidiary within the larger enterprise. A company code is primarily used to generate its own set of financial statements like profit and loss, balance sheets, and cost center reports. Access is usually restricted to finance user due to the sensitive data. When configuring a company code in FICO, users can define up to three operational currencies, typically a local currency plus two additional parallel currencies used for reporting. How many periods are there in the SAP FICO? SAP FICO uses posting periods to manage when transactions are recorded within the financial calendar. There are total 165 periods available for configuration. Out of these, 161 are defined as normal periods, typically representing months, so that allows covering over 13 years worth of monthly reporting history if needed. Additionally, four special periods exist mainly for fiscal year end and closes activity like accruals, deferrals, provisions, and currency evaluation. Companies have flexibility in how they utilize the special periods. Some assign each special period to the quarter end, and others designate them for year end activities. The key point is that while 161 period follows in the chronological month order, the four special periods can manually activate any time specific fiscal year task that needs to be performed. So, in summary, SAP provides 165 total posting period consisting of 161 regular monthly periods plus 4 flexible special periods for fiscal year and financial activities as required. What do you know about substitution and validation in SAP? SAP has capability to define default values and validate inputs through a feature called substitution and validation. These streamlines financial data entry, and substitution allows pre-filled certain field with an expected value based on defined logic. For example, automatically populating a customer or cost center code when other knows details are entered. Validations check whether users' input meet formatting requirements or fall within the reasonable values threshold. This catches incorrect entries. The main benefit in enhancing efficiency and accuracy is the finance team can focus on more complex tasks rather than manually filling volumes of repetitive data. In the SAP GUI transaction, users can access substitution and validation through two main options at the document level and at the line item level. The document level applies default values across the entirety like a customer invoice. The line level tailors substitution and validation to item details within the document. So, in summary, SAP equips finance teams to standardize data input through automated substitutions while also verifying information accuracy via input validation, streamlining posting and record keeping. In the SAP calendar, what exactly is a year shift? SAP system calendar follows the standard January to December fiscal year, but companies don't always operate on the same 12-month period for their financial reporting. To account for organization that structures their financial year differently, like July to June, SAP allows what's called a year shift. Essentially, the year shift functionality lets you align the calendar months to match your company's required fiscal year start and end dates. For example, if your financial year runs from March to February, the year shift feature will shift the standard SAP calendar forward by 2 months. So March becomes January in the system. This flexibility enables organizations on non standard fiscal calendars to still leverage SAP accounting tools and financial reporting processes without disrupting workflows based on their required month assets. The key benefit in SAP calendar gets customized to shift each organization's specific financial period requirement via the year shift mechanism. How taxes are taken care of in SAP FICO. Dealing with all the different taxes out there is a headache. Tax rates keep changing and rules are never the same between countries. Luckily, SAP FICO has lots of built-in smarts to manage taxes. The system comes loaded with tax information for many countries. Users can access and apply the right tax rates and regulations for where they operate. Less digging through paperwork to figure out percentages. FICO calculates sales taxes, payroll taxes, import taxes, and automatically applying the complex rule or in the background. So companies can focus on their business instead of tax paperwork. The system handles that part, and as the tax laws eventually updates, the SAP sends out the system update to keep everybody in current update. One less thing to worry about. In a nutshell, SAP FICO takes the tax completion burden of the organization shoulders through its flexible, up to date tools. Just key in transactions and FICO does the tax math for you. What are the major applications of SAP FICO you are familiar with? SAP FICO has a wide range of applications where it comes to managing financial data, core business processes for enterprises. It briefly touches six key areas. First, the financial accounting provides general ledger, account payables, account receivables, and bank management functions to record transaction and obligation. Second, comprehensive accounting oversights of profitability, cash flow, capital expenditure, and inventory valuation from central financial year. Third, asset accounting, cost accounting modules tracks company assets, depreciation, cost centers, orders, and profitability analysis. Fourth, project system accounting integrates project costing and billing into finance. Fifth, consolidation and reporting capabilities across business units and subsidiaries. And sixth, real estate management features like lease accounting, tenant and property management, and construction project integration. So these represents some of the major application areas where value position SAP FICO offers organization across industry. The list continues evolving to support financial management innovation. What is WIP in SAP FICO? WIP stands for the work in progress. This refers to assets under construction or production that aren't yet complete and ready for use. In SAP FICO, WIP allows companies to track costs incurred and time invested towards assets still being developed or manufactured. Essentially, as resourced, get consumed for components and labor during the construction phase. Associated expenses and hours can be logged in the WIP account for the specific asset. By capturing ongoing investment in unfinished goods, the eventual total cost of production can be accurately determined once the asset gets finalized and reclassified from WIP to finished inventory asset account. SAP also provides flexibility to customize valuation, reporting threshold, and integration touchpoints for WIP to align with an organizational capital project needs. So, in summary, the work in progress function enables visibility into the time, material, and expenditure allocated towards incomplete assets still maturing towards final form and functions. Can you name a few methods with the help of which the vendor invoice payments can be taken care of? There are few ways the vendor invoice payments can be handled within SAP FICO. Is first is manual payment or by cash or check. This option is still supported for one of the small suppliers that don't require digital processes, just basic checks or cash exchange. The more common method leveraged by formal vendors and partners is electronic payment transfer directly from the corporate bank account to supplier's account, fast, trackable, and integrated. Finally, SAP FICO interlinks with organization bank account through standard protocol. When a vendor payment hits within FICO, the associated financial transaction data flows automatically into related accounts for real time reconciliation. So, whether manual payment or electronic, SAP FICO keeps close oversight on purchase, invoice settlements, while other updating general ledger records in the integrated manner when the accounts are established in the platform. This maintains seamless transaction monitoring and financial reporting accuracy. What exactly posting key in FICO and what its significance? A posting key in SAP FICO is two-digit identifier that characterizes different types of business transaction. Posting keys plays a crucial role when posting entries to characterize and codify each business events. The main purpose of FICO posting keys is provide useful information related to a given transaction, including whether it's a debt, debit or credit item, that a type of general ledger account involved, the transaction status for reporting. For example, the common posting key designations are 01 for sale and customer invoice, 50 for material purchase and account payable vouchers, 40 designates payable or payments made to vendors. So, when users enter transactions manually or import data feeds, assigning the accurate posting case ensure each business case gets routed to the right accounts and flows properly into the financial statement. Getting posting keys wrong can lead to transaction posting failures or incorrect posting of profit and revenue or expenses. In summary, FICO posting keys acts almost like a zip code, directing businesses in transaction to land in the right destination accounts. The, des- the definitions constitute a core building block underlining SAP accounting. What is the significance of financial general ledger accounting? The general ledger plays a pivotal role as the central source of the truth for financial transaction and reporting. Here are some of the keys that things it provides for an SAP FICO perspective. First, it offers a central hub to integrate external operational accounts like account payable, account receivable, as well as asset, inventory, and tax accounts. This financial consolidation paints a unified picture. Second, all transactions during a period move through the general ledger, creating a complete audit trail that meets accounting compliance needs and internal reporting standards. Third, even complex or cumbersome accounting scenarios like fixed assets, accruals, currency conversion can leverage the general ledger advanced tools without disrupting operational momentum. And finally, pre-configured reporting templates, analysis tool, drill downs in FICO provides deep visibility into consolidated financials or like all stemming from the general ledger fountain that feeds them. In a sense, having a sound, well integrated general ledger accounting foundation enables organizations to focus on businesses growth with the comfort that finances are being monitored, managed, and reported smoothly in the background. What are the biggest benefits that you can have with the SAP FICO? There are many enterprise wide advantages to leveraging SAP FICO to manage core financial. I'll highlight I'll highlight six major benefits. First, accurate accounting data. With robust automated control, data validation checks, and system integration, users can trust FICO to deliver correct, consistent, and financial information. Second, unlimited account handling. The system can seamlessly scale to the record and track transaction across unlimited accounts without performance degradation. Third, comprehensive auditing visibility promotes compliance that transparent documentation of all business events and money flows. Fourth, financial transparency gives leadership a clear picture of organizational fiscal health with reporting tools that consolidate data across business units. Fifth, detailed expense tracking allows granular allocation of expenditure to cost centers for better budget planning. And fifth, It increases time and cost saving automation alerts the built in best practices get work done faster with less manual efforts. These advantages drive major value for finance teams reliance on SAP FICO to establish their center of records for financial transactions. What is the financial statement version in SAP FICO? SAP FICO provides a tool called Financial Statement Versions to organize and customize how financial statement gets generated from different reporting needs. Essentially, it allows financial teams to define multiple output layouts or flavors of balance sheets, profit loss statements, cash flow reports, and other regulatory filling. For example, financial statement version helps manage technical format required by tax authorities and governmental agencies that differs the leaderships may view internally. It also handles regional differences like US GAAP versus IFRS standard or basis differences such as showing financial or managerial cost accounting basis rather than the statutory rules. With the availability to pre-configure reports, pull specific subsets of data, apply conversion rules and output file types, the financial statement version paved the way for the automated tailor financial reporting needs for compliance requirement as well as internal consumption for the single source of truth. The key value is streamlining data sharing with stakeholders while lowering the manual workload to recognize and report the outputs. Tell me something you know about field status group. As SAP FICO transaction get configured, certain fields are defined as optional or required for data entry that may not be the relevant to given business process. Leaving these fields active can lead to cluttered screen, cause confusion and expected values and create inefficiencies if users focus time on essential attributes. That's where unutilizing field status groups comes in handy. This allows financial system administrator to define field status variants that collectively suppress certain field from appearing across select FICO documents and reporting templates. For example, intercompany transaction fields may show on the profit and loss statements that are unimportant for external financial reporting. So, field status variant to this hide this field can be created and assigned to legally mandatory report version. The tailor transactions and reporting screens to only reveal absolutely necessary input fields or data column for specific user group and purposes, preventing overload while optimizing workflow. How are tolerances for invoice verification defined? Invoice verification in SAP FICO allows users to configure tolerance level that specify acceptable threshold for discrepancies between vendor invoice and corresponding purchase order. Defining these tolerances ensures small immaterial differences don't hold up invoice processes while flagging invoices with mismatches outshine or outside acceptable limits for the further review. Some common areas where invoice verification tolerances can be specified include small absolute value difference such as allowing $1 to $2 net variance between invoice total and purchase order. Moving average pricing varies. Permissible percent threshold for product cost changes. Quantity variances. Acceptable percentage above or below ordered amounts like quantity variances. Acceptable percentage above or below ordered amount like allowing 10% over or under. And price or rate variances such as keeping per unit cost difference at 10% above PO prices. By dialing in tolerances like these rather than the enforcing strict matching, organizations can streamline invoice processes while still catching truly problematic expectations for correction. Spending time configuring reasonable verification tolerances up front saves invoice delays and headaches down the road. What exactly do you call a short end fiscal year? SAP allows configuring something called short end fiscal year variant to accommodate organization that needs to shorten their financial reporting period for operational reasons. There are few scenarios where running a short end fiscal year may be warranted. If a company gets acquired or merged mid year, they may need to cut their fiscal year short to switch over the acquiring entity calendar cycle. Or if a retail company wants to align their fiscal year with the prime seasonal period like Christmas, they could adopt a short end fiscal year to reset dates. Other factors like business model changes, statutory requirement, microeconomic shifts could give necessitate the shortening the fiscal period. Adopting a short year fiscal essentially means modifying the standard 12-month calendar year in SAP to condense the organization's accounting timeframe as needed to support underlying financial processes. This adjustment then needs to be carried across reporting configuration, tax settings, and any exchanges with regulatory agencies. So, in essence, the short end fiscal year is SAP's creates flexibility to calibrate fiscal chronology with operational priorities when warranted. What is the internal order option in SAP FICO? Internal order represents a cost accounting tool embedded within SAP FICO to track budgeted or planned cost and actual expenditure for specific projects, work orders, services, and other items across defined period. Internal order allows organizations to capture and measure all associated costs in one place, whether it's operating expenses, production outlays, overhead allocations, or staff time used. This centralized visibility helps understand the true cost to deliver custom projects or manufactured goods that don't follow standard list rates. Common usage scenarios for internal order includes long-term maintenance or construction projects, research and development initiatives, marketing event and campaign spending, IT rollouts and implementations. The key purpose is to providing transparency in total item and project level costs over the lifespan of specialized work that falls out everyday operational activities. This granular insights then aids planning and pricing for future initiatives for similar scope. Tell me something about the credit control area in SAP. SAP provides a flexible credit control area components that lets organizations define policies to limit financial risk exposure from B2B customers to setting credit limits and automation to put customers on credit hold. Key capabilities enabled through credit control area in SAP includes setting up an upper ceiling to the total understanding accounting receivable amount, permissible per customer account, new sales order won't pick if the credit limits gets breached. Optionally, stop credit privileges altogether for blacklisted high risk accounts. Automate the credit holds when customers miss payments and exceeds the term length, allowing the order release only upon the payment receipt. Notification when customers approach upper account credit thresholds so collection outreach can occur proactively. Customize credit calculation based on internal and external credit risk scoring data. Robust integration exists between the credit control area in accounts receivable, sales, order proceeding, accounting, risk management modules within SAP. In summary, SAP credit controls area allows organization to optimize customer credit risk balance to maximize profitable sales while minimizing bad debt and write-offs. What options do you need to fill when it comes to creating the credit control area? When setting up a credit control area in SAP, there are five key inputs that a user needs to provide. First is a controller's name. This is the title given to the specific credit control instance for North America collection strategy. Second, description. This field captures more details on the intended purpose and operational context for the control area. Third is the currency option. This toggles whether the credit policy thresholds and calculation should be based on the local currency, group currency, or both depending on the consolidated needs. Fourth is risk category. Risk classes allows default credit categorizes like processing workflow, credit specialist team based on the customer risk profile. And finally, the fiscal variant information ties the area to the existing fiscal year variant that aligns account receivable to underlining the accounting system calendar. Capturing these data points ensure the tight integration between credit management processes like dunning, collection, credit limit changes, and associated financial reporting needs. What do you mean by posting period variant? Posting period variant represents the time period set up in SAP FICO for recording financial transaction that gets reflected across general ledger accounts and financial statements. This enables organization to demarcate intervals like months or quarters to capture business events with data-driven accuracy for reporting purposes. Posting periods become especially important for managing complex accounting timeframes like fiscal year that don't align to the calendar year, retail companies adhering to weekly reporting needs, organizations requiring monthly, quarterly, and annual controlling special year-end periods for closing adjustments. The key benefit provided by SAP posting periods variance is ability to tailor financial accounting timeframes and system workflows to align with businesses operational cycle rather than taking one size fit all approach. This configuration flexibility helps optimize period and closing activities as well as integrity of data based reporting visibility for business events. What exactly field status is? Field status refers to functionality within SAP FICO that allows financial system administrators to define field attributes governing how certain data fields are presented, proceeded, and stored at the general ledger account level. The main purpose of customizing field status is to implement fine-grained control that simplify or restrict data capture by revealing and suppressing field based on the underlying accounts based being posted to. For example, the statistical accounts may need additional data capture that operational accounts don't require. Field status configures can show or hide the repeat field status configuration can show or hide specialized field dynamically. Likewise, if certain accounts should not be allowed to manual edits to inherit default values, blocking capacity could be enabled through the field statuses. So, in summary, field status gives organization a tool set to calibrate visibility and behavior of field intelligently based on posting accounts in order to tailor workflow, enforce compliance policies, and adapt to evolving operational needs. Tell me something about the parallel local currency in SAP. SAP FICO enables organizations that operate across multiple countries or regions to configure up some two parallel currencies in addition to the local currency used for statutory financial reports. These parallel local currencies serve as a couple of key purposes. Firstly, they provide supplementary currency option when transacting internationally beyond home country currency exchanges. And for European company configuring in US dollar and British pounds as parallel currency adds convenient multi-currency capabilities. Secondly, they allow mirror reporting of financial statements like balance sheets and profit and loss in assigned group level or globally trade hard currency so that corporate headquarters has financial visibility consistently in referred to the base currencies rather than dealing with the forex exchange conversion manually. The key value of parallel local currencies in SAP FICO is reducing frictions, risk, and workload around managing operations, accounting, and consolidation for global enterprises across borders. In SAP FI, what are organizational elements? SAP Financial Accounting contains some of core organizational structures that form the building blocks underpinning financial processing, reporting, and control. The main organizational elements within SAP FI are company code, represents a self-contained accounting entity with its own chart of accounts, fiscal year, and currency settings, often maps to legal business unit or subsidiary. Second, business areas allows financial visibility across companies' codes using profit centers, divisions, and geographical delineations like regions or markets. Third, charts of accounts houses the masters of record definitions of general ledger accounts and operational accounts like payables, receivables, and assets, acts as an account directory, and functional areas broadly characterizes accounts into domain like financial accounting, controlling, asset accounting, allows access, control, and integration by finance hub submodule. Understanding these key structures, their organizational interdependencies, or integration points enables configuring a solid SAP financial system backbone. What are the major components of charts of account? The chart of accounts represents the foundation holding general ledger accounts and operation accounts within SAP FICO system. When setting up customizing COA, there are seven key components that are defined. Number one, chart of account key, the unique ID code assigned to COA. The consolidation group version ties in all financial consolidation needs. 3. Language for multilingual account labels. 4. General ledger account number length and formatting. 5. Controlling area links COA to cost accounting. 6. Name and description details of COA itself. And 7. Block indicator if account creation within the COA should be restricted. Getting these crucial chart of account components right up front ensures the downstream accounting processes integrates seamlessly for reliable financial reporting across the business units and operating divisions and regional entities. Hey guys, just a quick info, ZaranTech is offering a special SAP Financial and Controlling FICO training program. This course simplifies the complexities of financial management using SAP, making it accessible for everyone. Discover how people have transformed their career with our program by checking out success stories on ZaranTech's YouTube channel. In just few weeks, you can gain confidence using SAP FICO, whether you are exploring new job opportunities or aiming for success in your current role. Take the time and the first step to boosting your SAP skills by exploring the SAP Financial and Controlling course. This course is a valuable investment in your career growth. Don't miss the chance to enhance your SAP journey with ZaranTech. Start learning now and experience the transformative power of SAP financial and controlling expertise.